Hey YouTube, what's happening? Chris here. I want to bring you all an update on Litecoin. Right now we're at $64.18. We're up 1.13%. And guys, it is August 30th, 2019, and it's 8:29 a.m. Eastern time. So I just want to put that out there in case you're watching this a little bit later in the day. But what's happening is we're coming up on some key areas here, guys, and we're basically having an intersecting point from our main uptrend and then our short-term downtrend that we've been dealing in. So we're going to get into all this, guys. If you get something out of these videos, let me know down below. If you like them, like, subscribe, hit that notification bell. I'm going to try my best to get videos out to you every day. And we'll just continue to move through this, guys. As the market continues to move, we just have to adapt to it the best that we can, and we have to watch these trends. And right now the trend still is down, so I want you to be aware of that. And the main thing for me is, like I did a video on yesterday, you don't want to try to catch falling knives, guys. I've done it before. I've been there before. You really want to wait for confirmation, even if that means you're not going to get the lowest price. You know, most people don't sell the exact top. Most people don't buy the exact bottom, and you just don't want to try to catch those falling knives. I've been there before. Really wait for that confirmation and see if we can get some confirmation so that we can really bust out of here if we are to have a move to the upside. So first of all, what I wanted to point out to you here, we're sitting on key support area. So our key support there is going to be at 64.62, and that's our horizontal support, and that's right here. And that's also correlating with this green trend line that we've had, which has been our long-term uptrend that we really need to respect, guys. We need to stay inside of this. We don't want to break down through that, because if we break down through that, things could get even more ugly than they already are right now. And what's happening to us is that we're having all these moving averages, and I'm going to go through the moving averages. I changed them from yesterday to you to give you a little bit more of a perspective here. So our yellow moving average is going to be our 10 moving average, or our 10 EMA, and then our blue is going to be our 20 moving average, and then our green is going to be our 30 moving average, and then the white's going to be our 50. So as you can see, the trend is down right now, and that's the beauty of these moving averages. They're going to help show you in trending markets if you're going up or you're going down. So right now the river is down, and we have a lot of downward pressure pushing down upon us right now. And what we need to see, though, in my opinion, guys, we would need a nice, some type of doji candle right here showing indecision to kind of stop this here, or we would need some type of hammer candle or a bullish engulfing candle on volume to try to get back first over top of this 10 EMA, and then to our 20, then our 30, then our 50. And what you want to look for is this 10 to start crossing over the 20. So what you would want is a cross of that 10 over that 20 with a nice candlestick pattern, like a bullish engulfing candle or a hammer candle, something along those lines. But remember how powerful even this 50 moving average is, guys. In this whole uptrend right over here, we were up above this 50 basically the whole time. We dropped down a little bit here. We had a bullish engulfing candle, and then we continuously got pushed to the upside, but this was acting as very strong support for us. And now do you see how it's overhead acting as resistance? So for us, what we need, guys, is to break out of this downtrend that we've been in, and that's that orange or yellow trend line that you're looking at here, because what we've been getting pushed into is lower highs and lower lows. So we have to change that pattern. We need to come back up here, set a higher high, then a higher low, higher high, higher low, and get back up above these moving averages. And why I said it's called basically catching falling knives is because right now, guys, with this, all these moving averages and the pressure of this river pushing down on you, if you try to go long here, yeah, you may get some type of little reaction bounce where we bounce up, you know, even to, let's say, this trend line or this 10 moving average like we've done several times, and then you just get pushed down even farther a lot of the time. So that's why you really want to wait for confirmation if you're going to go long. That's just my opinion. If you're looking to accumulate, you know, that, I guess that's a different story. If you're trying to hodl, guys, and you say, hey, you know, we had a big drop and I want to buy some, I'm going to save them, I'm going to put them in a ledger, and that is what it is, then go for it. But for me, trading, I do not want to jump into a trade right now. I was stopped out of my position, took a nice little small position here, but once we broke down through this candle right there, I was stopped out. So that's where, you know, you just have to be careful, guys. I took my position, and this was me catching some falling knives. I took it off this nice doji candle here, and I was just holding it basically throughout this whole time because I was expecting a potential break to the upside here. Bitcoin was to move to the upside, but I had my stop loss down in here as well. And that's where you have that risk to reward management that you always want to do. You want to have those stop losses in place. So I got stopped out at basically break even, or maybe a little bit below break even. And that's just the name of the game, guys. Like I told you, it happened in Bitcoin as well. I got stopped out out of that. I'm in cash right now. I'm being patient and I'm waiting for the next opportunity. That's what I'm looking for. And the next opportunity would be us breaking out of this downtrend line and hopefully trying to get out from out from under these moving averages. That's going to be key for us. Next thing I wanted to talk to you about was our Fibonacci and how we broke down through that as well. So the reason why I took a long off there was because of the 0.618 Fibonacci. I was expecting some type of a bounce off that 0.618, but what happened was we ended up falling through it. And when you fall through things like that, it can be very devastating to the price. So right here, we'll go from our swing low to our swing high. You can see we broke down through the 0.618 was at $69.86. So that's something you want to keep your eye on. And the next spot in terms of the Fibonacci would be down to the 0.786, which is going to be around $48.96. So it's not out of the equation for us to go down to around that $50, guys. It really could happen. Am I saying we're not going to bounce to the upside? We definitely could, but we need more confirmations to confirm, because right now the trend is down and we have to consider that and we have to remember that. Next one we're going to go to is our RSI. And our relative strength index right now, we are basically in oversold territory. 30 is going to be that oversold. We're sitting at 28 right now. We definitely can go lower. We have been as low as 16 before, and you can see it was back over in this area. This territory was around 16 or 17, right in that range. So we really can get down low, guys. It happens all the time. We could get pushed even lower. It's just something that we have to be aware of, but we are in that oversold condition. So maybe that's an area where we potentially could get a bounce here in the next few days. Next one I wanted to look at was our MACD on the daily chart. Our MACD, we did have a bullish cross, guys, but all of a sudden we got pushed back to the downside and the histogram starting to tick to the negative again. So that's something you want to look at as well. I pay a lot of attention to the MACD. And then we'll go into our stock. And with our stock there, we just had that bearish cross, a real sharp breakdown there, guys. We are at 9.23 and 26 right now. So that is that oversold conditions, but we have not started to get that bullish cross back to the upside right now. So this would be considered, just going off the stock here, you'd be trying to catch falling knives if that's the case, if you're just to jump in right now. And then we'll look at our Bollinger Bands to kind of see how overextended we're getting. So we're at the lower end of the Bollinger Bands. So that's something that we do want to pay attention to. Sometimes, guys, we'll get bounces. You see how we got overextended out of them out here, and then we had a nice little reaction bounce out of that. So we'll have to take a look at that. And our middle band, getting back up to our middle band, is going to be around $74. That's going to be the key area. But right now, guys, I got a very close eye on this lower trend line here, this green trend line that we've been paying attention to for quite a few months here, as well as this trend line that's pushing us down in these moving averages that we have lost and are now acting as overhead resistance. So that's what I wanted to bring for you guys here today. I didn't want to make it too long, but just want to give you a quick update. Let's pay attention. Let's see if we get a little reaction out of here, you know, a little bounce up here to potentially try to test this trend line again and see if we can get a break out of it. And if we do get a break out of it, guys, you know, we could definitely go back up to those 90s, come up here and test maybe that 50-day moving average if we are to break out of there. So let me know down below what you guys think. Like, subscribe, hit that notification bell. Appreciate y'all being here with me today. Take care.